Hey, good morning, everybody. It's Hammer. Today is November 15th, 2023. This is your VettaVA mortgage market update. Got some great news to bring to y'all. You guys are going to like this today. Joined from as well with me is our special guest, Mike Payne. Mike's been on before. Mike, thanks for joining us again, man.
Yeah, you're welcome. Anytime.
And do me a favor, just tell everybody a little bit about yourself.
I'm a loan officer down in Florida, and I'd love to help veterans get into houses. Um, yeah, that's a little bit about me.
Awesome. You're like me. I keep it simple. So, all right, everybody, if you are here live, let us know and just make a comment. I see there's at least one person on, but usually we get a few more coming on there. Many of you do watch on the replay. And of course, we are monitoring your comments on the replay as well. So if you are here on the replay, do me a favor, just put hashtag replay in the comments. It lets us know that you're watching. And if you have any questions from anything we talk about today, go ahead and put those in the comments as well. Feel free to tag either Mike or myself, and we'll answer those for you. But with all that said, I'm going to jump right in and give you guys a quick recap on what's going on with mortgage rates. So what we saw is, and it's funny, I almost have to look at the markets to kind of get an idea and remind myself, but we saw things improving last week up through Wednesday, but Thursday and Friday were rougher days for mortgage rates. And that's why if you're getting rate quotes, you always want to remember that a rate quote it's perishable. It has an expiration to it because markets are always changing and mortgage rates are always changing. Sometimes they're big changes, sometimes they're little changes. But if you're trying to compare mortgage rates, you want to make sure that you're comparing quotes that are made within a few hours of each other at a minimum. Because if you got a rate quote last Thursday or Friday, today you're probably going to find that rate quote is much better. And you should find that rates have improved from Thursday or Friday. At least that's what I see on most rate sheets. What do you see, Mike? Or what do you out there in the field?
Yeah, I see that they've improved since last week, and they've been improving for the last couple weeks. And my gut is telling me they're going to continue to improve slightly, but that's what I've been seeing.
Yeah, and I agree. So let's kind of tell you guys why rates did improve and what's going to control where we're going in what direction. So rates improved because markets are now expecting that the Fed is done raising rates. And over the last 18 months, we've seen, I think it was 11 or 12 or different rate increases that we've seen over that time. And we've seen rates go from COVID when they were the Fed funds rate, their policy rate was 0 to 5.25. And we were kind of on the fence on whether we were going to see any more rate increases. And in fact, last week, the reason that Thursday and Friday that rates got a little bit worse was because Fed Chair Jerome Powell was out there speaking and said, hey, listen, we've got to quash inflation and we're committed to that. And if that means we need to raise rates some more, we're going to do it. So when he said that, it kind of shook everybody up and markets were like, okay, maybe we are going to see another rate hike. And they kind of vacillated a little. And what happens, mortgage rates react to what's going to happen in the future, not to what's happening right now. So when markets believe that the Fed is going to raise rates in order to try to drive inflation down, mortgage rates are like, okay, well, we're anticipating this because traders and all the back end gobbledygook and all the jargon I could drop on you guys, but all that stuff is reacting ahead of time, trying to get in front of it. And that's why we often see those moves ahead of time. So this week, though, we had some really cool things happen because yesterday inflation data came out, and it came out just slightly better than expected. The smallest amount, 0.1% across the board on the 4 different readings that they have. So what happens is we have what's called a headline reading, and then we have what's called a core reading. So the headline reading is all of the inflation, and this is consumer-based inflation, or what we call the consumer price index. And that headline reading, it came in, we do a year over year and a month over month. And both of those came in 0.1% better than expected, just that tenth of a percent. And then in the core, what that does is it removes the energy and food prices because they're very volatile. You guys know that gas prices can go up and down quite a bit. Different food prices, believe it or not, can go up quite a bit depending on different things. So they take those out, and that core CPI is also measured year over year, month over month, and both of those readings were 0.1% or a tenth of a percent better than expected. That small improvement, though, was enough to send everything, rallying, and we saw mortgage rates improve quite a bit yesterday from Monday, from Friday, from Thursday. So if you got a rate quote on Thursday or Friday, and if you get that quote refreshed today, you should see that rates have improved a little bit. If you locked in a loan on Thursday or Friday, again, talk to your loan originator. But remember, companies are committed when they go ahead and lock in these rates. They may not be able to do a lot for you, but they'll try to do anything they can to help you out and to get take advantage of those differences. But as far as moving forward, the main thing that people want to know is, okay, well, if the Fed is done raising rates, are we going to see mortgage rates drop from here? And what do you think is going to happen on that, Mike?
I think it's going to take a few months until they get a clear indication from the Jerome Powell or the Fed that they're planning on cutting rates. Like you said, they do it in the future, but until they get a clear date, then I don't think that they're going to. It's going to kind of stay the same as it is right now, if data keeps coming in as it's been projected to.
Yeah, absolutely. And I will share my charts with everyone next week. I'm currently away from my office, so I'm going to keep it simple for you all this week and just do a talking head video. But I'm going to show you guys charts next week. What happens right now is markets believe that there is a 0% chance that we're going to see another Fed rate hike. They have basically said we think the Fed is done raising rates at this point. However, the Fed is going to need to cut rates soon because after driving rates up very high, it's a lagging effect. It's going to slow down the economy. It's going to hurt the labor market. And it is expected that we're going to find what we call a neutral rate, which is where the rate is that keeps the economy running, but yet doesn't let inflation take off too high. And it's most likely that the Fed is going to need to lower rates after they've raised them up as high as they have. Now, markets currently are pricing in an expectation that that could happen by May. And it goes back and forth between May and June. So right now they're looking that it's going to be by May. And the mortgage rates that we see today are anticipating that could happen. Now, if we see signs of a much slower economy, if we see signs that the labor market is sputtering, then we could see mortgage rates improve a little bit on that news because markets will anticipate and traders will anticipate that the Fed is going to cut rates sooner than what they're currently expecting. But there's a couple of things to consider right now. Number one, I think a lot of consumers are going to have the kind of the impulse to say, hey, if rates are going to go down, I want to wait before I do anything. I want to wait until rates drop. And that's something that would, seem like it would make a lot of sense, but I'm going to say that you don't want to do that. You don't want to wait until rates drop. And one of the reasons for that is because there's a relationship between home prices and interest rates. Now, when interest rates went up, we should have seen home prices dramatically come down. We saw interest rates go from the twos and the threes into the five, six, sevens, even the eights for some people. And when that happened, generally you would expect home prices to start to come down to offset some of the expense to the buyers about this difference. That didn't happen this time because we've talked about it before. People are golden handcuffed is what they call it. They're stuck in homes because they've got phenomenal interest rates that are probably, we think will be a once in a lifetime type affair. And they're not buying a new home. They're not selling the home that they're in because they have these rates. So that's not likely to change when rates go down a little bit. We may get some people that are like, okay, we're a little closer. Maybe we'll sell now and we'll buy, but it's not going to be a ton of inventory. So when rates drop, demand is going to increase. And Mike, what did we see happen last time that happened?
We saw people doing offers over asking price and having to, appraisal gaps and
Yeah.
not being able to get seller concessions. Right now I can get seller concessions to help you pay closing costs, which actually reduces your overall amount that you have to pay to get into a home.
Yeah. So, Mike, I have, as you know, I'm here taking care of some personal business, and the gentlemen are actually waiting on me. So I'm going to go ahead and wrap this call up real quick. And thank you again for coming with us. I appreciate it, everybody. Again, basically for a rate forecast, just to give you guys that heads up, I expect to see mortgage rates that are going to stay very much in line with where they're at now, possibly improve a little bit after the holidays as we head into December. I'll go into a little more detail next week, but for the next week or so, I think you're in a good spot. You could see things kind of stay about the same. Mike, is there anything you want to add before we wrap it up for today?
No, that sounds great. It's always great to
Awesome.
be here too, Hammer.
Sorry to cut you short today. It just happened to be the way that things worked out for me. And everybody, we'll see you next week. Take care, everybody. Thanks, Mike.
Yep. Bye.